Hello, future millionaires. This is Aztec, and this is the CSE. We're going to be taking a look at Evergrande today and how that may affect Bitcoin, also banks, real estate, stocks, the dollar, and we're going to take a look at the VIX, so essentially volatility in the markets. And this is really important to look at as a crypto investor because this is macro. This lets us kind of predict the future or at least prepare. So I'm going to kind of show you different scenarios and how you can prepare for these. So let's go ahead and just jump in right at the top. So what is Evergrande? Now, this is an article that was written last year. If you don't know, the Evergrande situation has been going on for a long time. Now, Evergrande is one of China's largest real estate developers. And this was an important piece of information that came from this article. It says over time, it has accumulated $305 billion in liabilities to Chinese banks, foreign investors, and its own employees. So if you wanted to make a slight comparison here, Lehman Brothers had $617 billion in debt when it filed for bankruptcy in 2008. So the topic today is partially, of course, Evergrande, and they filed Chapter 15 bankruptcy today. And this is why the markets have kind of nuked. So essentially, this information came out last year, and we can see that the billions of dollars in liabilities is less than Lehman Brothers was back in 2008. If you don't know what Lehman Brothers was and why it was significant back in 2008, it says before filing for bankruptcy in 2008, Lehman was the fourth largest investment bank in the United States. So that was the fourth largest investment bank in the United States when it filed for bankruptcy and caused a massive recession in the United States and caused many global repercussions. Now, in this case, we're talking about Evergrande, and it doesn't look to be, at least based off this year-old information, as large of an entity as Lehman Brothers was, but still very, very significant, and we'll get into more of that. But it's also interesting to note that back then, a year ago, it said optimists expect the Chinese government to intervene soon and offer some sort of financial bailout, yet Beijing has so far stayed quiet. So all of this has been going on for a long time, and a lot of people expected China to go ahead and bail out Evergrande, but it never happened. And I think that also points to a much larger case and issue of with the global economy, with housing in general across the entire world. So it's essentially so bad that the government says you're not you would generally be too big to fail, but we're not going to bail you out. So that's important to note. It's also important to note from another article and many other articles that kind of corroborated this information. This article sums it up very nicely, though. It says it is estimated that China owns around $1.1 trillion in U.S. real estate, which is about 5.5% of the total value of all U.S. real estate. This includes both commercial and residential property. So why am I bringing this up? China isn't just a major holder of U.S. real estate. It's also the investors in China, and China as a whole owns real estate all throughout the entire world. I think China also holds a very large amount of real estate in Australia, for example. But I bring this up because I'm from the United States, so I was looking into this, and I was wondering, how will this affect the housing market, and specifically the housing market in the United States? Now, obviously, the housing market is one thing, and then you also have the banking crisis, which has existed this entire year. I mean, we've been leading up to these issues, but there was many very large banks that went down in the United States this year, and that was actually a positive narrative for Bitcoin. Bitcoin was pumping in the beginning of the year because of the banking crisis. So when I see Evergrande collapse, I then think about Bitcoin and how it will impact United States banks real estate in the United States, stocks, and these kind of things, because this affects Bitcoin, right? And we're cryptocurrency investors. So looking at this from a macro standpoint, it's relevant. And then additionally, we're going to take a look at everything from a technical standpoint as well. But it's just important to note these things first of all before we jump into the technicals. So I guess we can go ahead and take a look straight away. Bitcoin, a lot of people said, was in this kind of ascending triangle pattern. And that would be the kind of thicker white line that's ascending here and this yellow line above. So in this kind of ascending triangle pattern. And it's been in this pattern since roughly March here. And we weren't able to break out of it to the upside. We actually had several fake outs here. Now, rolling over and breaking through this pattern to the downside is definitely bearish. And statistically, when you have a breakout to the downside, it usually means that the price action will follow through down to the bottom of where this pattern first started. So that's roughly a little bit below $20,000. So that's actually extremely bearish. Now, generally that doesn't happen like a laser straight down, but it could, especially in the instance where there's a chain reaction of events that are very bearish. Right now we're in a panic phase, everyone's panicking. But then again, the market might realize that this was panic, this was FUD, and this is bullish for Bitcoin, and Bitcoin could bounce from here. And we'll get into those ideas in a second. But looking at the bearish outlook first, because I think right now it is very bearish and we do have a break to the downside, you would generally see over time a movement down to 20K. And of course, it doesn't generally happen right away. You might get a retest back up to around the 27,300 mark, maybe up here around the 100 exponential moving average and the underside of the thick white line here, this ascending trend line. So right around 28,600 area. And if we then started moving down from either this resistance or this resistance, then that would generally suggest that we're headed a lot lower, probably moving down towards this $20,000 area and maybe below, or like a little bit below. So that's the bearish outlook, and there definitely is a lot of room to suggest that you could get that, because if Evergrande creates a bunch of chain reactions of more negative things, the market could perceive this overall, as very negative. Stocks could continue crashing. You could hear global recession now here, things like that. Obviously, things like major geographical, well, let's just say major countries crashing, their economies having issues, also could lead and have led to some very bad times in human history as well. So that there's also that we have to take into consideration, which I'm not going to say because we're on recorded video here. But guys, there's a lot of things that could go negative from this standpoint and cause a ton of FUD, and we could not be fully priced in to the downside. So obviously the negative kind of target would be right around $20,000. And again, we would probably test upward first and move down. But if things get really bad, it's just going to continue moving down. And then you have to reanalyze everything from that point. Now, the positive, guys, it's very hard to be positive here. But if you were to be positive, you would hope to start spiking upward relatively quickly. The further you have price action underneath these major support areas, the worse it looks for Bitcoin and the cryptocurrency market. Because if Bitcoin's going to show strength, it's going to show strength, and then it could be considered a hedge. It has been a hedge through the beginning of this year with the banking crisis. So how does Bitcoin potentially go up from here? Well, in my opinion, you would just need to see it start bottoming here. you could say from a just technical, skipping the fundamentals, and not considering what I also said before, where you're in you just broke down from an ascending triangle pattern. Also, you broke underneath on the daily the 200 exponential moving average. So not looking at that, but just from an indicator standpoint on the technical side of things, we're very low on a lot of indicators, suggesting that you might get a move up shortly, maybe after retesting back down around 25K, or just maybe moving sideways for a bit. And what I'm referring to is, for instance, this RSI, it's very low here. Generally, when you get this low over time, you spike back upwards, or you move up a bit. Additionally, you're back down to the lows of the Stokes here, and even on the daily, you can see here that there's some selling pressure, and you're moving downward on the MACD. I don't see like a flip necessarily showing or indicating here anytime soon on this indicator alone on the daily, but you do see that you are pretty oversold in general. So from an indicator standpoint, you could potentially see a flip in the near future based on indicators alone. Also, something very important to look at, I said we'd be looking at the dollar. So the Dixie, so this is the dollar compared to other major currencies in the world. Since the beginning of the year, has kind of been inversely correlated with Bitcoin. So as it moves down, Bitcoin is moving up, as an example. And what we see here on the Dixie is that the dollar is finding some resistance in this area. Can't take out this high here back in July. And we're kind of finding some resistance here. So if we were to start moving down, again, this could suggest, maybe the Bitcoin is going to be stronger than the dollar, and it's seen as a hedge. So another thing you could see is dollar move down from here, Bitcoin staying strong. So we're just looking, we're grasping at straws, guys, but these are the bullish things that we'd be looking for. So even from an indicator standpoint, Stokes headed moving down. These are the Stokes here moving down here, and the RSI kind of upward facing but moving down, and even the MACD showing that this buying pressure is kind of subsiding here. So that's the histogram, and then you could see the signal kind of rolling over potentially. So if we saw that these started to roll over, so these momentum indicators rolling over, and the histogram showing the buying pressure further subsiding, and the signal crossing under, then just from at least an indicator standpoint, and also from a technical standpoint where the dollar is finding some resistance and then moving down, that could be bullish for Bitcoin, and maybe Bitcoin also seems like a hedge. Another very bullish thing would be banks, unfortunately, having issues in the United States due to Evergrande exposure, to Chinese investments, real estate, these kind of things. And this is the kind of news that we'll be getting in the next week, I'm assuming. It's either going to be that they didn't have exposure or they do have exposure. And obviously we know that the banks are very weak right now. So if more banks continue to fall, then that could be bullish for Bitcoin. We also have to look at stocks, and overall stocks are pretty bearish. It seems like NASDAQ kind of doing fair in this range, but it's been moving down over the past months here, and moving sideways more recently. Although the SPY is definitely moving down, so this shows a lot of weakness in some stocks. Then you have some ETFs like the Junk and the HYG also moving down. These are indicators, in my opinion, because they're more risky assets. And when these risky assets in the stock market, US stock market, start to be sold off, that generally means Bitcoin's going to be sold off. So Just stocks across the board seem a little weak to me. The US 30 finding some resistance here, seemingly kind of falling on the momentum indicators. So I think that stocks don't look so hot here. So that's stocks. If we look at volatility, I think we can move to a weekly here. It'd be important to note that we're at a very kind of low volatile area. Where we had some spike ups was back in October 2008, kind of August 2008. So back in the Lehman Brothers stuff that we were talking about previously. And then in March of 2020, you guys all know what that was. And, it does look, though, on this weekly, so very zoomed out, that volatility might be picking up. And that would go with the general idea that there's some bad things coming for global markets. So volatility is going to pick up. Now, volatility doesn't mean to the downside directly. It could also mean to the upside for certain assets. But volatility is seemingly kind of positioning to move upward from what I can see. So what does this all kind of suggest to me? We looked at, stocks. We looked at the dollar, and we kind of pictured real estate. Which way is it going to go? Well, if these Chinese investors have access to a ton of real estate in other countries like the United States and Australia and all these other places, are they then going to have to sell those assets to cover other investments? And then that could mean that the real estate could go down. I think overall, you do look at real estate and you go, well, it's very overvalued across the board in the global economies. You look at stocks across the world, very overvalued in many cases. And the dollar being circumvented and being fought by BRICS and all that. And so you think, well, where are you going to put your money? I think the dollar's been great over the last couple of years, but you gotta like look at it now. Are we now headed where the VIX and volatility is seemingly going to start moving up? Evergrande just filed Chapter 15. All these stressors in global real estate and stocks and the dollar potentially. Does this now mean that something like cryptocurrencies could benefit from it? There's definitely something to suggest that cryptocurrencies could benefit from this money flowing from overvalued assets into what's very undervalued at this time, being that we're in a bear market. So we also have the Bitcoin ETF, and wouldn't it be so interesting that while these overinflated assets start to fall, that money then starts flowing into the digital economies and world, and then Bitcoin ETF and positive regulation, all this stuff, and then major surge. So there's definitely some room to suggest that cryptocurrencies could move up from here. And look, guys, we're grasping at straws, but it's also the truth overall. So I think what we want to look forward to, what we want to look for is how Bitcoin holds itself right now. I mean, if we start lasering down, it's just super bearish for Bitcoin, and you're going to see a lot more downside on the altcoins. So if we start lasering down past this exponential, the 200 exponential moving average here on the, let's actually go to the daily. If we continue moving down underneath the 200 exponential daily moving average, then it's very bearish. If we come up to retest it and move down, that's very bearish. But if we do move up a little bit, at least you have a bit of strength that could lead to some positivity in the midterm. But you could see then another move down. So where that move goes is what we want to look for, and how Bitcoin holds up as it potentially comes up to meet certain resistance points. That's what we're looking for on the bearish bullish side to tell us more about the picture. And then we also just want to look at in the coming week the information and data that comes through on the macro side on how global real estate markets fare because of Evergrande going down, how stocks continue to fare because of the overall FUD. And we also want to look at the dollar. Again, guys, the dollar is going to be really important to look at because if it continues moving up and there's a lot of strength and people start hedging into the dollar, in my opinion, that's another indicator that's very bearish to Bitcoin. If you start seeing for instance, like the Dixie moving up, that would lead me to believe that there's cryptocurrencies are also very weak. And then another thing is to keep an eye on the VIX, because if it starts spiking up, that means that things like volatility in all markets could move a lot quicker than you could expect. So all important to look at. Never give up on the future of money. Let me know what you think. Take it easy.